Everyone, this is Joe Gentili from Sarraf Gentile LLP. In today's video, I want to discuss premium financing for life insurance. In looking through the news today, I noticed that there was a settlement that was reported on a $15 million premium financing deal, and the defendants were a bank and advisor, and I believe Pacific Life was the underwriter. Oh, sorry, the carrier that issued the policy. And I anticipate that we're going to see a pretty substantial increase in litigation around premium finance deals going forward. A lot of people that were sold on the idea of premium financing really large life insurance policies were misled on the idea that there's going to be this basically perpetual arbitrage between the crediting rate that they're getting on the life insurance policy versus the interest rate that they're paying to borrow to buy the policy, so that they're always going to just basically have this period of continued free growth in the policies, or even worse, I've heard some people are basically promised free life insurance, borrow money at X%, and then your policy earns X% plus 50% on top of that, and that goes out forever. That's a really misleading story. And with interest rates being high, and in a lot of cases, the interest rates on premium finance loans are above the crediting rate, or even above, I've heard in some instances, above the caps on IULs, so that no matter what the market does, you can't out earn the interest rate on the premium financing deal. Those policies, if this persists for really any amount of time, those policies are going to run into trouble if they haven't already, really, really quickly. Running into trouble could mean a whole host of problems, ranging from a lapse to increases in collateral required. If you're in that situation, this is something you need to get your arms around relatively quickly. What's going on? You can't let that sit and persist for a while, given the size of the policies and the size of the dollar amounts involved. If these policies end up upside down, it could have a really, really large financial impact on somebody. And I think a part of getting your arms around this situation should be consulting with an attorney to see what claims that you might have involved in getting this policy in the first place. This is really true for people that were misled to get into this with promises of a perpetual arbitrage or free insurance, which is just irresponsible to sell these policies on those premises, because it's just unlikely to happen, very unlikely to happen for the amount of time that somebody has to be in these policies for them to work out. So if you were impacted by this, if you bought a life insurance policy and you used premium financing, and it's a large deal, and you were sold on this perpetual arbitrage myth, I encourage you to reach out, have an attorney, if not me, have another attorney take a look at it and see what your claims are, because again, this is the type of situation that you're really much better off addressing earlier rather than later, both from a legal perspective and also from a financial perspective. So, thanks for watching the video. And if this is a topic that interests you, this intersection between law and life insurance and annuities, I encourage you to subscribe. Thanks. Bye.